All right. Jeff, is this thing on? Are we good to go here?
I don't know. It's a little chaotic, man. We're kicking into earnings season. It's the end of the month. The holidays are here. I don't know if you have your Halloween costume, but I'm getting, I'm starting to think about it. I'm starting to kind of lean towards that.
Yes, it is time to start thinking about Halloween costumes for sure. It's in about a day and a half. Welcome everyone to Jeff Macke Live. Spencer Israel, that's Jeff Macke. As always, there is a lot to discuss with everyone's favorite retail expert. We have some earnings. We have some tariffs. But let's start, Jeff, with something we haven't talked a ton about. At least I haven't seen a ton written about it, is the effect of the government shutdown on the consumer, which is in turn going to affect companies. We've talked a lot about how markets in the aggregate look past events like the government shutdown that we're in right now. But you're over here saying that there actually is going to be an impact coming up soon because of the shutdown. Let's talk about that.
It's one of those things with just tentacles on it, and I don't know a ton of government workers personally. You probably don't. My son actually is a government worker. He's defending the country. Granted, not many people are actually attacking Annapolis right now, but in theory he is, and he's a paid worker who is not taking home what he did before. So his $40 a month is going elsewhere. But you know what? I tell you what, it's impacting companies like Walmart. It's impacting all of our tariff-proof companies. It's kind of this unrelenting war, Spencer, on consumers in general. We've talked about tariff-proof companies. It ran an index, made an index, got an index. Because Amazon, Costco, Walmart are companies that really aren't impacted directly by the tariffs, or at least they win the form of market share. The stocks haven't done a damn thing. I pulled up Walmart just because it's a personal holding. It's something I'm trapped in. Had a little breakout. Things were getting exciting. And the president and his infinite, if not wisdom, whatever word you'd like to substitute it in, he just decided to shut the government down. No one really seems to care that much. It kind of works to everyone's political advantage. So we're just going to be shut down forever. That is going to impact the SNAP, which amounts to food stamps. It's a large percentage of what grocery spend goes on. It turns out that about 24% of all the food stamp money goes to Walmart in one form, but it's 5% goes to Amazon, Costco. I mean, this trickles in. Now, it's not the highest margin product. It affects the consumer product groups more, the Frito-Lays of the world. And this is not a social commentary. It's just an economic fact that this is going to take a few pennies out of these companies' earnings. And so when you hear Amazon report, that's going to be something they have to speak to. There's a lot of different moving parts here, but we've got a Walmart breakout that has failed, and we've got companies that really aren't impacted, or at least I would argue win from these tariffs in general. But when you start taking pennies at a time out of their EPS for kind of capricious reasons, kind of purely political on both sides type of issues, like this shutdown thing that's going on, that leaves a mark. And it just becomes something that between tariffs, between the shutdown, you're not talking about a really high margin group when you speak to the retailers in particular. We're going to talk about the cruise lines, which you would think would be completely immune to it. But again, it's this comprehensive, unrelenting war on consumer companies in particular, because that's where the margins are, and that's where the bulk of Americans are doing their spending in favor of a lot of these AI techie type of companies. We talked about Target last week. They're finally getting layoffs going on. Amazon went in and just said, you know what, Target, your 1,800 layoffs is cute. We're doing 35,000, and we're just going to kind of gut our entire workforce. We'll see how they address that tomorrow. But that's a company that on the retail side, they lose. On the AI side, they actually win. But man, they have to thread the needle, and we'll get into kind of the impact of that. But the truth is, I ran some numbers this morning. It's not nothing. It's not a huge amount in terms of the EPS impact, but you're talking about companies that in Costco and Walmart in particular, really expensive on a multiple basis, and they don't have a lot of earnings to give. They've got pretty thin margins. And so when you stop that sort of flow of customers coming in to buy groceries, not only is the social impact fast, but it hurts them on a corporate side too. And it's never been easier to lay off companies This impact on margins is not unrelated to the job cutbacks that we're seeing in corporate America right now. It's just a thing that's happening. Everyone's been kind of saying, oh, everyone thought margins were going to be a hit on these tariffs, and they didn't happen. So, tariffs are great. I'm calling bullshit on that. Pardon my language. It's the internet. We're allowed to say swear words, when warranted. Not egregiously, but we're going to use them selectively. But I tell you what, it's the margin is going to hit one way or the other, right? And we've talked about it a million times. 3 ways to do it. You take it from the suppliers, you kind of spread it all throughout the store, or the corporations make less. Either way, it's going to have an impact on stock prices unless you can come up with a real narrative that AI is going to pay off in a big way. Amazon's got it. The Targets of the world aren't going to necessarily go to a robot type of business model and get those layoffs working. So make of it what you will. But as we head into earnings season, particularly with Amazon reporting tomorrow, man, they better come up with a story, because it's these tariff-proof companies are not proving to be tariff-proof stocks.
Hold on, a couple of things here. First off, where was that stat that I had? The 25% of food stamps get spent at Walmart. Is that true? That is that true? Now, come on, Spencer. If there's crazy.
A defining plague of my life, it's that I know too much random crap about just garbage things like that. But yes, in fact, that is true. It's something that rattles around in my brain and prevents me from doing things like curing cancer or whatever I would do if I had more space mentally. Right. But yeah, that is. Walmart does about $700 billion a year. So about half of that, 60%, give or take, is groceries. That's only 1 or 2% in terms of the gross margin. So, they get people in the door with that. It remains to be seen how it's going to impact the food stamp crowd. But, you're not talking about people who are entirely indigent that do that. I'm in no way criticizing people that are operating on food stamps, but, it's not nothing. And I'm not sure how it's going to impact the traffic flow, but it will have a material, at least to a degree, type of impact. And these companies aren't valued in a way that allows them to shave a lot off EPS. You take the forward multiple of Walmart from 35 to 36, 37, 38, and we're at nosebleed levels already on a lot of stuff, and this doesn't help.
A couple of great points from One Hole in the chat. With regards to Costco, and we've talked about this before, Jeff, I thought Costco's whole shtick was that because they have the membership model, they can afford to, not have a ton of different product SKUs in their store, B, not turn over those products a whole lot, and C, not make any money from anything because they have the membership. So wouldn't the impact of the temporary suspension of food stamps be limited for Costco because they have the memberships?
Well, that's where they make their profits. But then again, that whole break even in the store thing, that's where you have to bury price increases. That's where you bury the traffic. And if you don't get people in the store, so sure, you have a couple different things that would help them, but they got to break even. Right. And so, that's a little more laden than it sounds like. That just doesn't mean you kind of, pay what you pay and chuck stuff on the aisle. True. You actually have to kind of control your cost as well.
True. And another great point with regards to people trading down from Walmart, One Hole. Yeah, I mean, I guess there's the dollar stores and there's DG and there's Dollar Tree, and those charts don't look anything alike, which is kind of funny. Dollar Tree has gone straight up for a month now? The whole month of October, straight up. Dollar General, not so much. So, it's kind of a weird situation, but we'll have to keep an eye on those because you're right. Where do you trade down? There is no trade down from Walmart. It's Walmart, right?
It's Walmart, exactly. And they've been trading up kind of frantically. They've been using Target as a feeder from that perspective. But again, it makes it really hard to turn around a company like Target. It puts an impact on Costco's margins. That stock has looked like absolute Duke for, and not Duke, the basketball team, Duke, like the euphemism, but it's going nowhere fast. You can argue that we're in a post-peak Costco world, and analysts did argue that earlier this week. It's hard to necessarily refute that. I mean, at the very least, the stock has earned a breather, and boy, has it taken one. Same thing with Walmart, same thing with Amazon, which we're about to get into, but you add it up and the stocks are tariff proof, but they're not capricious presidential policy proof. So we could really kind of use a deal in China, and about 500 basis point cut from the Fed today. I don't know if Jerome Powell's listening. They probably are. They probably tune us in right before they go to press on their announcements. Chairman Powell, to save your job and to save America, go big, go big.
Okay. Well, yeah. Speaking of Amazon, so they're going to report earnings tomorrow, and like we talked about, and you said before, they do thread this needle because they are the largest retailer, online retailer in the world, but then also they have the cloud business, which is taking over the company, right, and AI stuff. So, uh, when you look at this group, the Mag 7, Amazon sticks out like a sore thumb, right? Because it has not participated in the last few weeks the same way Nvidia, Apple, etc. all
hasn't done a
have,
damn
right?
thing for 5 years. I mean, it's not really. I mean, it's this has been a rather atypical. Now you can say, and as someone who's long Amazon and has been for a while, it moves in bursts, and it's coiling, all coiled like a spring. You could also counter that maybe Jassy isn't quite the CEO that Jeff Bezos was. Bezos is off on his yacht, just kind of throwing his money at God knows what. I'm not sure, but on the one side they make a lot of money, but on the other side, you know what? They've got 1.5 million employees. That varies a lot by the season. That's a ton of people they can cut. They are absolutely super tech positive, super prone to invest. 350,000 people in corporate. I mean, my God, that is a jaw-dropping amount of people. And I tell you, the core of their operations, especially, you don't have to get to this super sci-fi world where they deliver everything via drone before you realize that they can run those factories without a ton of folks. So that's one of the problems with we're just going to do everything here domestically and create jobs. It's the extreme version of an AI world type of Amazon supply center is like one guy who kind of flicks on the lights just to make sure no one's around in there. And you just have bots doing it. And it already is.
I think we're a little ways away from that. But yeah, to your point.
We're not quite as far as you think, though. I mean, it's got little R2-D2s on there flipping around. They can read, they can scan, they can throw things in a box, they can address it, and they can have it at your doorstep. Basically, the guy who drops off at your doorstep is the first time someone with actual hands needs to take care of that. So otherwise, the future of robotics is not Elon Musk having some little bot hand out candy in front of the New York Stock Exchange window or in front of the Squawk Box morning show like we saw yesterday. The future of bots is a thing on wheels that does all the factory work in your back room, which is an advantage in the long term that Amazon has over Target. Target is not replacing those employees with bots. They're replacing those employees with empty desks. So, it just is an additional spread over the long run. That's why I call these terror-proof companies, because Costco, Walmart, Amazon, they have enough cash flow that they're just going to increase the distance between themselves and every other merchant. But, it's those jobs, they're gone, boy, and they ain't coming back, to paraphrase the boss, Bruce Springsteen, a movie that you should not, in fact, go see, if I may toss in a movie review.
We should do that. Movie reviews with Jeff. Bottom line, they need a beat tomorrow, and they need to project confidence with regards to AI. And
super huge red flag to be announcing this much news before you get to earnings. That says that we're going to want to focus on earnings, or we're just trying to distract you with kind of shiny objects before we absolutely crap the bed. Either way, what we've seen from a lot of these consumer companies, Cheesecake Factory, Carnival Cruise, we'll get to RCL, over and over again, we've seen kind of beats, and let's just be super cautious about Q4. The latter makes sense. The reactions have not been great, particularly for some of those firms that have been doing well so far.
All right, let's move on here. Let's talk about Etsy. In the news, earnings this morning. Also, they announced a CEO change. This is one that you have owned or for a long time, I believe. So it's getting cracked. So it's down what? It's down 8.5% this morning. But obviously, there's a lot here. So how should we take this?
There's a lot here, and this is a little bit of a kind of a New York centric crack. This is a company that I happen to know the guy whose CEO did an incredible job, Josh Silverman. Etsy was a flat out kind of B Corp socialist entity before Josh got there, which is amazing. And they went public as such, which is also amazing. I interviewed the prior management and they were explaining that to me. And honestly, I kind of thought he was just screwing with me. You know, he's like, we're not really about profits. And I'm kind of looking at the guy like, yeah, really? Yeah. I was in Detroit kind of doing other stuff and I'm talking to him and he's like, seriously? You know, and how's that working for you? Not well is the answer. It was not in fact working for him well. Josh came in 2017 and I said, you know what, my friend from business school is not in fact a socialist. And so I think there's more meat on the bone that they can get profit-wise. He went in there. It was not particularly well received at first. It was much better received when we took the stock from about $11 to $250 at the peak of COVID. They caught a huge flyer with COVID that you know, it was a nice investment up until kind of the lockdown made everyone start buying Dreamweavers and handcrafted masks from all the Etsy distributors. But, you know, it was a painful sort of transition from socialism to a capitalist entity. And this is another one of those companies that they really didn't die. Is it ever going back to almost $300 a share? Probably not. But you know what? I wrote it from 14 to 220. It's one of the best investments I've had personally. It was pretty awesome. It was like 1,500% in 3-4 years. You know, if I had one of those little cannons to shoot off to celebrate, and you know, that would be, Josh deserves to ride off into the sunset. Capitalism wins. Etsy, it's a pretty good company though. You know, I think that they're going to be fine. They're going to be fine for what they are. They're you know, it's going to be eating into that. It'll be a while before we make new highs there. But you know, they're kind of built to last. They're another one that's tackling AI initiatives. Pinterest is a similar type of organization where, you know, we've got Shopify reporting next week. Everyone's trying to make it easy for you to shop online. That's the good side. The bad side is I'm not sure how profitable it's going to be. But you know, it's congratulations to Josh. Congratulations to Etsy in general on discovering the sweet, sweet nectar that is capitalism and the profit agenda. And let that be a chilling warning to New York City.
And everyone put on your homemade jewelry in honor of Etsy here today.
Yeah, a little handcrafted bead. You knit together a Dreamweaver and just enjoy, you know, and march off into the sunset.
All right, let's talk about cruises. I know you love them. We had Royal Caribbean. They reported, was it yesterday now? I don't remember anymore.
It was yesterday, and and down again today, down yesterday, down now in its own little bear market, which is weird. Carnival, remember we talked about them a couple weeks ago, also reported just kind of stellar earnings that were essentially sold out or as close as we want to be to sold out for next year. You know, it's an embarrassment for riches. I kept an upscale cruise index. That's like 8 different companies, all of which have reported pretty much terrific numbers and just about everything that you would hope for. The industry is not actually overbuilt. This kind of should be the halcyon days. It's a levered up group of companies that you know, they cost a ton of money to make these ships. You know, the profits are great. It's just really hard. Again, you have this inescapable narrative that's hanging over the market, like the sort of Damocles that eventually the consumer is going to roll over and they're going to stop taking cruises and they're going to stop doing upscale stuff. But this has been a frustrating industry for those people who just ignored charts entirely and weren't smart enough to kind of get out of the way. But all of a sudden you're down 20-something% on the, you know, from the highs for the group as a whole. For Royal Caribbean, didn't do anything wrong, but like Deckers, you know, you can buy the dip and get away with it, but you know, you better wait for the dip before you do. Demand strong, but you know, just kind of slightly cautious. Cruise gains cut in half. They went on an absolute tear from April until pretty much midsummer and been a little bit of a disaster since. I would start to look at them from the long side once they stop sinking. You know, there's a certain falling knife, a certain Jack and Rose kind of floating on the door type of, maybe you buy them after Jack falls and slips into the ocean. Maybe that's the time you get Long Rose. But in the meantime, not a group that you necessarily need to play with, that you need to be involved with. You know, big earnings week though this week. I mean, we hear from Starbucks, Chipotle tonight. We've got Amazon tomorrow. It's a big hairy deal. You know, look at that chart. That is just kind of terrifying. And for that to be if you think about kind of where the sentiment was in April, that's where the bottom is. That's Royal Caribbean year to date and the percentage off the all-time highs. That was a pretty steep, pretty dark days in April. It seems like in a lot of ways we're much better off than we were. A lot of the things that we were afraid of in terms of the recession seeping in, not going to happen. It's the biggest Halloween ever. It already is. If we don't sell one piece of candy between now and Friday night, it'll still be the biggest Halloween in the history of American Halloween celebrations, which is, maybe not my cup of tea. The kids are gone and it's a little weird for a guy my age to dress up. You're just getting into it now, though. I'm sure you're going to come up with a cute little baby outfit and dress your child adorably and maybe buy a bag of Reese's.
I'm supposed to know what he's going to be. What is it? Yeah, I don't know. He's got some sort of a pumpkin costume, but we did do the trend where we put the baby inside the pumpkin.
Nice.
He did not like that. I'll tell you that.
No,
not a fan.
No. Yeah. And you can't. And there's no. Don't worry, son. It's only a little slimy and stinky and horrible, but it's going to be adorable.
Didn't love it. I wanted to mention on the Royal Caribbean chart though, what you can't see on this one, if you just zoom out a little bit, is very obvious area of, I guess they call it polarity, right? Prior resistance, maybe new support in that $275 area. So we're not that far away from that. So maybe if you can hold that area, that's maybe
you've got some defined risk. You've got, you can take your shot and roll the dice and kind of see what you're coming up with. It's Amazon's a little bit the same way. You got that kind of 220-ish area that it's been playing with. 200 obviously is a harder stop, but man, it's been really hard for these companies to make new all-time highs. Whatever they forecast for Christmas going in, maybe it's bullish that it's really hard to get that excited about Amazon right now. But as you said, it sticks out like a sore thumb when you look at the Mag 7 and you just see a company that, that essentially earns whatever they want. Amazon is one of the most extraordinary, just pure organizations that you can even think of. And the stock just can't get out of its own way. I can't really blame Jassy directly, even though as a shareholder, I'm inclined to blame someone, so it might as well be him. But regardless, they're sacking an awful lot of people and they're kind of shuffling the deck chairs, if we may mix our metaphors, and bringing all, put a button on it with Royal Caribbean and Amazon as well on the little Titanic that is their dead stock. Okay. And only in the context of the Mag 7 is only being up 40% over the last 5 years, Titanic level, but it's bad.
That is some Titanic, the Amazon, which is up, it's up 3% this year. So
3%. Come on. For the amount of risk that we're taking,
22% in the last 52 weeks. That ain't so terrible.
It's pretty terrible. It's pretty. You say that as though you're not a shareholder. If you cut me, do I not bleed? I do, Spencer. I do. I'm only a man. 3% is not enough for me. I have expenses. Damn it. I've got families to feed.
Hey, before we go, there's a question from the chat. Can Jeff comment on the historic impact on food-related companies and the government shutdown? If you just look,
it's a disaster for food-related companies. It's no kidding. 8% is the hit that Kroger's looking to take. The grocery stores are going to be outsized impacted, but beyond that, absolutely, the Frito-Lays of the world, the Conagras, the chicken folks. It's clearly the folks aren't going to starve. There'll be some sort of displacement and they'll go out and buy goods, but it's entirely a headwind. And again, it's one of those that, okay, so we can see that. Does that make them a short? Nope, because the shutdown should end. The shutdown shouldn't be happening at all. It just shouldn't be a thing. So I'm not sure how to game it. It becomes pretty frustrating as an investor, as a fan of companies and a fan of human beings in general, to see these sort of unforced kind of, these just stupidity of shutting down the government. The people that are so disproportionately impacted are not either side of the political aisle. It's just human beings. And so it's just kind of a load of crap that we're doing this. And it sucks, but it's absolutely going to impact earnings. If you can look past it, if they take the hit this quarter and they're talking about it in the context of a shutdown in the past tense, that's great. If we missed the China deal and we just kind of stayed dug in, I mean, normally shutdowns used to be a big deal. Like when Clinton did one, holy crap, it was in the news every day. now no one really seems to care. It seems to serve both sides just fine to be shut down, and it just plays into their rhetoric. It's not a super happy time in politics right now, which doesn't make it. I'm not a big fan of the sky is ending. America's always been divided, but we've never quite been as happily entrenched as we are at this exact moment.
Find me a consumer staple or restaurant stock that that has a good looking chart besides McDonald's. There really aren't many of them out there, right? Most of them look terrible. Most of the staples, at least the ones I just went through 10 right just while Jeff was talking, they all look bad. Pilgrim's Pride, Tyson, you mentioned Conagra, terrible, terrible, terrible. You can go down the list, right? You can look at Mondelez, like awful, right? You can look at Hershey,
Yeah.
awful. Well, I don't know what's going on with Tootsie Roll in the last 2 weeks, but something's going on there. It's down 20%. Terrible, right? So
It's super thinly traded, super weird
well,
structure at Tootsie Roll. Kind of a fun company to look into, but yeah, it's 201. And again, you can come up with GLP excuses. You can come up with all kinds of consumer strap, but they need this shutdown like a hole in the head. There's going to be trading down from consumers for sure, just in general. It's maybe that's the only place you're seeing sentiment, but the restaurants, look at Cheesecake Factory today. Cake is let them eat cake.
down
We
five,
could use
down 5%. Yeah,
that's another let's beat and be super cautious on guidance, because what the hell is going on in the government side, and all our costs are going up. So, it's that maybe isn't having the impact that people think, but no one should be taking victory laps over these self-inflicted policy rules that are kind of creating a one-sided market. Just you got to go buy AI stocks or you're not keeping up.
yeah, like I said, or McDonald's. There's pretty much it. AI stocks or McDonald's. Those are your options.
There you go. McDonald's is going to be serving more chicken. They've discovered chicken. It just has nothing to do with beef prices, folks. We're just going to be doing chicken more. So yeah, but they're doing pretty well. But again, that's a situation where they're also selling out their units, and that's going to be a one-time thing. So it's tough all over. But we're at all-time highs, so no tears.
Yeah, there's a lot not to like on the food side of consumer land. On the retail side, there's a lot more to like. But we'll have Jeff back next Wednesday. We'll talk about the Amazon report. We'll talk about I suppose Apple as well, because they report tomorrow. And you mentioned who else is next week? I'm blanking now.
Shopify is next week.
Yeah.
Chipotle and Starbucks are tonight.
Okay.
Keep an eye on those. That's going to be an interesting one. I just spoke to him last week. We sold out of Starbucks in our portfolio, not to give stuff that I don't own anymore away, but I'm not expecting a huge beat there. I think that when you've got kind of QSR workers going on strike and forming unions, it's a tough turnaround. It's tough to get people excited.
All right, listen up. If you want to get Jeff's instant reactions and analysis and not wait for this show every week, the only way to do so is by joining the Macke portfolio. The link is in the description on below the video on YouTube. Also, you can join the sign and get his free email that goes out a few times a week where Jeff just kind of brain dumps whatever is on his mind. So I read everything Jeff writes, and you should too. It makes you a better investor, but it makes you just more aware of what's happening with the consumer, because consumer spending is the economy, right? And so it's kind of
the economy. It is the 70% of America, and so much more in our hearts.
Plus, I just think it's naturally more fun to talk about companies that I've heard of. No offense to Nvidia, or you know what I mean. But I'm not interacting with Nvidia products every day. You know what I mean? But I get Amazon at my house every day, right? I drive past McDonald's a lot of days, right?
Yeah.
I shop at Target and Kohl's and all these places. So it's more fun naturally to talk about companies that we interact with on a daily, weekly, or monthly basis.
And everyone shops at Amazon. You know what else is fun is you walk into a store and it's just full of stocks. So many, you walk into a Target and there's 150 different companies that are publicly traded, represented right there on the shelves. Locked up behind goods in the case of Target that you can't get to and you can't find anyone to unlock. But that's another problem. We'll talk about that next week.
Jeff, we had a family outing to the Gap on Friday because we had a gift card that hadn't been used for a very long time. So we all went to the Gap on a Friday night. And it was nice. It was a good time. It was had by all. But I was thinking about you the whole time. I was like,
get some denim. to pick up a Canadian leisure suit?
Yeah, I did not grab the denim jacket. I mentioned it. The wife was not a fan of that idea. She's like, it's not your style. So I couldn't do that, but it was a very clean store. Nobody was there. It was just us. But it was
that stock's trying to get out of its own way. Yeah. Victoria's Secret, the mall's not dead. Victoria's Secret is doing great. Come on, the mall's doing fine. You just got to be a little selective.
All right, everyone. I'll let Jeff run. Thanks for watching. Drop us a like. Get the Macke portfolio. Again, the link is below in the description, and we'll see Jeff next week.